Good morning, guys. It's good. It's been a while. Okay, so this morning is more about me catching up, checking in with everyone. What's that? Somehow, somebody always escapes the mute all function. Okay, I think that's everyone. Okay, the XY out of this world spike. Wasn't expecting that, but I don't know what's going on. Besides the fact that there's a rate spike or rate increase or whatever that is, I have no idea what's happening with this guy, and I'm not going to look. I'm just going to trade without the XY for a while, just to get back in the groove. I'm not going to be using any large leverage, so no hurt. As trading lower, very much lower. This kind of extensive move lower invites the idea that I need to zoom out because there's nothing really to look at here. And that's one thing that I find is better when you're doing higher time frame analysis or analysis on any time frame. When you're looking at a time frame and you can't clearly see market structure that identifies where the market's likely drawn to, then it means you may have to zoom out. But higher time frame analysis takes a while, so not about that life. More surprises, AU crashing. Biggest surprise of all was this guy right here. Not even the G would drop was as large in range as GJ. The last time we're looking at GJ was this rally here. Took the highs and then it just crashed. Wow. But again, because there's a whole lot of sentiment in the market that's built around fundamental data, I personally don't like relying on technicals from a higher time frame too much, because then it becomes easy to form fit the data. The technicals are saying bullish, so you automatically want to be bullish, and you completely forget the idea that the markets are drawn to liquidity. And if there's no liquidity, then there's no point in trying to be bullish. So I'm strictly going to be doing lower time frame technicals. I might not even go to an hourly chart. I'll probably go M15 as the core of what I'm doing. And look at this, amazing. M15 is going to be the core of what I'm doing. So I'm going to do everything on an M15 chart. But because I've been keeping my MT4 closed, except for the one-on-ones, just scanning through quickly to get an idea of what's happening. And that's enough data for me. I'm learning Pine script. So I've been off MT4 for a while. So I'm gonna use this template that I used for the last live call I did, which was not a public call. I'm convinced something's wrong with MT4. And don't say it's because it's banned. It's been like this for about a month before it was banned. It just freezes on me. Completely freezes. But anyway. All right, so to jump into some naked charts. So we look at all new analysis. It looks like a naked chart already. If time allows, I'll get through all of these guys here. If not, it is what it is. I think it's a broker. Okay, cool. I'm gonna start with NAS. Let's start now. If you escape the mute button, just mute, please. Too much of a hassle. So when you start trading in New York at 8 a.m., I start trading. First thing I want to know is when it's 8 o'clock. So that's going to be 1500 on this broker. Everything's going to be done live. So if you're impatient, you're going to feel that burn. If I'm trading at 8 o'clock, what's important for me is going to be the range created before, which is London. So 2 to 5 a.m. This is 5 a.m. All right, here at wherever 12 is, which makes this the low. There we go. And the highs from London would have been wherever there's 9. So this is the high from London. So in New York at 1500, I want to be able to reference this span or this range. So what we have here, we have from this high to this low, we're in the premium portion of this range. And somebody wants to ask, why not use all of this? Because I don't want to. I want to use London range. That's what's important. This is an element of manipulating data. Not form fitting, but manipulating data. This is the range I'm focused on. We open in the premium end of the range right here. Here and here. So on principle, whenever we open in the premium end of a range, it doesn't matter if you're bullish or bearish. It's all about what do you expect next. That's the draw on liquidity. Not where do I get my entry and then I hope it goes to that point. But if this is the range and we're opened here, where's the next likely place that you can draw to? Well, I have a simple rule. If the market opens in premium, I think buy side liquidity or premium arrays. If this is London high, then buy side liquidity would be resting above here. Now, if I'm here, why would I be interested in a buy side liquidity run if the buy side was not taken? Take a look at London high right here. We can clearly see that this was a run. This was taken. So if this is London being taken, I'm not interested in seeing this run again, and I'm definitely not interested in seeing this. My focus is where are the premium arrays that price could respect. No, this is London low. If this is, wait, did I get it wrong? Thank you. That's actually wrong. This is not London low. If 9 o'clock on this broker is 2 a.m., somewhere over here, can't pinpoint it right now. Or maybe I can, just to. Somewhere in here is 9, right here, which makes this low London low. There we go. Precision oriented. Yeah, you caught me. So we have London high being taken right here. London lows then is not taken. The analysis still remains valid because we're in the premium end of that range and we have London high has been taken. So my thought process is we should be drawn to where liquidity is below the range since we already took this buy side liquidity. Premium array is being framed around this. If you take a look at it closely, it would be this guy right here. That's the candle I'd be focused on. So when price comes up here, I'd be looking to go short inside this. The rule is, for those who don't know, if you have an order block, the order block candidate must create a push that breaks market structure. It's rule number 1. If we're looking at right here, because somebody's wondering, why did this fail? This is an order block candidate, but there's insufficient volatility right here that constitutes a market structure shift. This push right here is a market structure shift. Just fib that for the culture, leave it right there. Why is this a market structure? Why am I fibbing this range? Because it's a dealing range. We have buy side and sell side taken. Market structure shift was taken when price traded below here, right? So we're gonna identify that low. I said I was going to do M15. After this is M15. So now when the market structure shifts here and we take the liquidity, you're focused on this leg, which is the dealing range leg. First thing you want is 50%. 50% is coming in right here. Then you want a raise at 50%. At 50% of this leg, we have an imbalance, which is highlighted by, if I'm not mistaken, that candle's high, and a whole bunch of them in here. So when there's a whole lot of imbalances, it becomes a little bit difficult to identify which liquidity pool or which imbalance do you focus on. My rule is I always look at the second one. So I'm just going to tag this to highlight 50% of the range. Starting in this expansion lower here, we have the first imbalance, then the second imbalance. This imbalance actually extends from the red line to this. So personally, if I was going to go short, I would not think about going short below that on principle, but that's just for entries. If we enter here, where would price want to be drawn to? Lower. That's the easy part. I have these lows. We have a high broken here, huge displacement. We have that low. So this is just a trade idea, right? This is the part that this is where most persons start messing up. You do an analysis, you can clearly identify where liquidity is, because to be honest, it really isn't that difficult to find a relatively equal high, a failure swing, or all, right? This is just a trade idea. Why would price want to draw down here? That has to be crystal clear. Price would be drawing down inside here because this is internal liquidity. We have a range right there. We have the lowest low somewhere over there. And we have all these lows formed inside the range that did not take the lowest low. That makes these failure swings. These are failure swings, they house liquidity. Simple. So here to my first target offers me 30 points and 55 points respectively. Now for risk. If I entered here, where would I put my stop loss? This entire area constitutes what we call fair value for selling, meaning it's okay to see price trade back inside this area. Confluence comes from that, because that's the order block. So now this is just an idea, right? At this point, it's just an idea. There is no trade. The trade idea is if price trades to this right here, I'm thinking about going short. If I go short here, I have to factor in the potential of price trading back to the order block before seeing it go lower. So that means, choose the whole part stuff. 1 second. So that means if I want to enter here and put my stop all the way up here, am I okay with that? Well, firstly, based on my rules, it's within 20 points. So I would be fine with that. But if I'm so convinced that this is the order block that price can retrace to, and why would I be so willing to suffer that much drawdown on a pair like NAS that can wick me out? I wouldn't. All right. So now we start factoring when you want to see price straight up inside here. What am I talking about? Equities get crazy around 9:30. It's going to be 16:30 on this broker right here. Right? That's 16:30. So with all of these ideas coming together, my trade idea moves to that. You can put it right over in the center like that. The narrative now is I want to see price trade below these lows. I'm not interested unless it trades above here. If it trades above here and we have price pushing, this right here would be where I want to see my entry form. Now we take a look at all the things we have going for us, right? We have buy side liquidity pool rated here, rated again. Displacement, we have a short-term high right here, right where the liquidity is. And we have time coming in right here. This trade idea for me is if it comes here, I'll take it. If it does anything else, I'll walk away. Watching or creating a plan like this means price can start moving before it gets to your entry or your objective, and you won't get a trade. And most persons are going to be sad about that. Why are they sad? I don't know. They didn't lose any money. But framing a plan like this and sticking to it is usually one of the hardest things to do in trading. But this is my plan for the morning. Why is that an order block when price closed above it? Based on the definition that I use for what is an order block, this is a valid order block. This just means it's rated. So right here is where I want to see get reclaimed. And that's all I want to see for my trade. Add another NAS chart and do M15 just because I said I was going to do M15 only. Let's clear this up. The OB candidate was used. You read it? Yeah, that's the one that closed above London highs. So on the M15 chart, we don't have to factor in session highs as much. All I need to pay attention to are intraday highs and lows, which means the only thing I need is going to be midnight opening price for maybe the last 3 days. We have period separator here. I'm going to indulge in midnight New York, just so this becomes a little bit easier to explain. So these lines right now are midnight opening price, which means previous day's high is here. Previous day's low is here. I mean here, there we go. So again, we have price opening just about almost exactly equilibrium of this range. If price is opening in the equilibrium, it means I don't care. Really, I don't care. I don't care what happens in the middle. Bulls buy low, pigs sell. What? Bulls buy low, bears sell high. In the middle, pigs get slaughtered. So if price is in the middle of the range, how do you frame a trade idea or a trade plan? Well, we look for the liquidity. We always look for the liquidity. If we didn't have the benefit of any of this information right here, what we would have is, this is the last time a high was broken. Well, this is not really 3 days of data, is it? That's previous days high. So we haven't had a previous day's high being taken in a while. Previous day's low here, not taken as well. So this is an inside day because we have the highs and lows of the current day inside the previous days. So what do we know about inside days? Inside days usually lead to expansions, or smaller ranges usually lead to larger ranges. So the price is being compressed right here. No, I'm not going to put a trend line and connect this to this and then do that. No, that's not what we do. If the price is being held inside here, we start looking for where are the areas that price would reasonably push for if it's going to expand higher or lower. And that's how you make your plan. Both of these are relatively equal highs. So that's buy side liquidity. Both of these are relatively equal lows at sell side liquidity. If price is trading in the middle and we're not interested in doing anything, we're just watching. This is now the highest closing up candle from the previous day. If we have displacement after this candle was created, then I'll factor that in for an order block candidate. Probabilities increase if we have this candle here taking liquidity. Here we have high. This candle did not take liquidity. It traded above the highs, but based on my rules, right? If you have a rule that you use for order blocks, it's fine. Based on my rules, I wouldn't consider this. The candle that we focused on is this one right here. Because this is the candle that closed above this liquidity. This guy did nothing, really. Yeah, that guy did nothing. So if I'm bearish, and this is in roughly about the equilibrium of the range, and we have liquidity down here, how do I use this to frame a trade plan? I would not be interested until price trades through the low of this candle here. When it trades through the low, I'm thinking market structure shift and higher. I mean, when I say higher, I mean retracement and then low. So we have the candle low right here, or the order block low right here. We had basically price stop in the same place, and then it pulls back. This is not sufficient for me. I'd be more interested in seeing something like this happen. Takes this, buy side already tagged right here, retraces, and then I get the lower prices. This is what I'd be interested in if I'm using this 15-minute order block to trade. Okay, so now we wait. So this is do nothing conditions. Doesn't matter if this moves. The hardest thing to do in trading is to see a move happen in price and not try to validate why it happened, but instead focus on, if I come in the market today, what steps do I take to determine if a trade is worth taking or is high probability, right? That's how you build a consistent process, by understanding what did I do yesterday that made me win? What did I do yesterday that made me lose? If I did this and I lost, I check if it was in line with my process. If it's a part of my model and risk is managed, then it was just a losing trade and we move on. No big deal. If it was not a part of your process and it's a losing trade, then you realize that you did something wrong. How do we use this in M15 to frame it in M1? I'm not sure what you're asking. Definitely not sure what you're asking. We're using previous days highs and lows here, where we open, where's the liquidity, and where we look for order blocks and market structure shift. That's what we're doing on M15. The time frame shouldn't be that big of a deal. If we scale this up to a daily chart, I'd be looking at maybe where the month started, where the quarter started, and then looking for very large moves. But the principle remains the same. The process remains the same. Gold, M15 gold as well. And let's pull that period separator thingy on. I'm using midnight New York because 90% of persons who trade ICT uses that. So we have the previous day's high right here, previous day's low right here, and previous day's high right here, previous day's low right here. So we can see that price traded through previous day's lows and then it's retracing. If price is retracing, if you have seen that, are those videos ICT put up, then retracement seek imbalances, right? So if I'm going to go short, I'm looking for imbalances in that leg down here. Imbalance number 1, imbalance number 2. I'm looking for there, right there. Price traded up. Time, no trading before 8 o'clock, which is 1500. And there we have it. So if I was a gold, is this crunched up? Oh. Okay, I think I broke my gold chart. So if we're looking at gold this morning, it would have been, here's our retracement right here. Double click the pin. Oh, thank you. Here's my retracement right here. Here's my candle. Not the best displacement ever. And no FVGs right here in the displacement. So I'd be uninterested in this move. Here's 8 o'clock. We have liquidity taken right here. So again, sticking to the process, whenever we have liquidity taken, we look for the arrays. If there's no liquidity taken, we look for the liquidity run. This is the array. This is the entry. These are the lows. No clear market structure shift yet. I'd rather my entry form after market structure shift. But we have 9:30 coming up, and I want to see what NAS does. Let's see if I get to take a trade. So it's moving lower. This is our first liquidity pool. And not at the liquidity pool yet. So let's see what we get here. Is she going to run up and give me a nice entry or not? If she does, I'll take the trade. If she doesn't, I didn't lose any money. We have big news at 10. Oh, big news at 10. Okay. Thank you. Thank you. I actually didn't know. But I'm not interested until NAS gets here either way. Tempted to buy this, but no. NAS M15, no clear market structure shift, which means if I get my entry higher first, when price trades lower and takes the low, there's a potential that I have to scale off more to allow for a higher time frame market structure shift before seeing lower prices. Just transposing analysis across time frames. Okay. Is it going to give us the entry? Tempting. This was tempting me just now. That price in the time that I wanted to enter. But no. If it moves without me, then I just missed it. No big deal. This is the hardest part of trading. Stock in the setup, battling FOMO. $11,447.5, is that it? That price is 11.47. So close. I'm laughing to myself. Hi, Bree. Good morning. Good morning. Oh, my order was rejected. That's a funny one. That is a funny one indeed. Yeah, of course. All right, so this is my entry, and I'm gonna take that modest 20 pip stop. And nothing to worry about for me. Okay. So now, here's another example of how I patiently wait for a setup. Time, price, a couple of things I didn't include for obvious reasons. But yeah, let's see if she gives me this low. This low would be ideal. M15, what's M15 doing? So there is a high time frame liquidity pool just above me. Could be concerning. Could be concerning, but my stops are in place and there's nothing to worry about. So let's talk about realistic expectations. What if this trade loses, right? Would I think, let's say, trying to find out a good way to structure my response. Would I want to refund? No. If this trade, if I get stopped out, my stop is at 11.477. If I get stopped out of this trade, I can clearly see that there was a draw on a higher time frame here. I was zoomed in the lower time frame, and that's it. No change my model, no anything. That's it. Full stop. So if price rates 11.477, then you know I got stopped out. Good morning. What? S&P has not taken this high. I'm not big on what's it called again? What's that thing called again? SMT. So not sure what to make of S&P not taking the high. The idea of today was just to share how you create a plan, the elements of that plan, timing. That's it. We could always look at hindsight and say, oh, you know, this could have been there, that could have been there. Could have always used the M15 to get a better entry. Entries are the second important thing. The draw on liquidity is the important thing. This is what we need for market structure shift, and the liquidity is clear. Means that it will reverse if, okay. 4 minutes to see what happens. But I already told you where my stop is, so no big deal. Here. It's looking like on the M1. M1 is looking like we're rebalancing this imbalance inside here. So that looks like I may have been stopped. Let me check. Yep, just got stopped. Am I going to enter again? No. There's no clear reason to enter yet, or no clear reason to enter again. So I'm now looking at both of these since they're here. And I never like this idea when the candle that takes liquidity is that big, because it means for validation, I'll have to wait for the opening price of this guy here to get taken. Not a fan of that. I don't like that. Because then if it's a large body like that, I'm going to miss 70 pips just waiting for my trade to get validated. So, oh, somebody said, isn't that a bullish dealing range? So a bullish dealing range would be one that takes sell side liquidity first. Do we have sell side liquidity taken here? Revenge trade by now. Madness. So we have, let's check if this is a bullish dealing range. I don't think it is. We have price coming down here. I guess you could say that this is sell side liquidity taken, and then this is buy side, and then here's that retracement, and then push. In that case, we'd be looking at a few things. Number one would be, where's the low? And number two would be the order block at the low. Oops. Which would be right there. And then we pull that over to wherever that entry formed. And that formed yesterday. So this is yesterday's analysis. With yesterday's analysis, where was the draw on liquidity? These highs. So yeah, good one, good one, good one, good one. Good one. 10 a.m. is critical. Yeah, waiting for 10 a.m. No big deal. 20 points on NAS. Last swing low and high before the retracement for this expansion is not a small dealing range also. Last swing high and swing low before this one. I want to assume that you're referring to this one right here, this push, and then here. Sell side, buy side. By definition, it makes sense. Is this one I would use to trade? If it's a type 2. Nope. Didn't get there. So this would have been a buy trade that I missed. No big deal. Can't win them all. So back to stalking. I think this is about to end. Back to waiting and seeing what happens for now. I think the M15 liquidity pool just got taken. So let's see what reaction happens here on a lower time frame. But the call is about to end. So we'll talk in the group. Enjoy the rest of your day.